All right, let's go ahead and get this started. Welcome. Today is Wednesday, August 6th, 2025. And today is Chart Work Wednesdays with Chart Work with Carlos. And we're going to go ahead and do some markups here, some technicals. Right now, I have gold set up here. And we had a booked week last week as I was just like I mentioned Monday, we were talking about Monday, how last week it was full of news events, and now this week is a pretty quiet week. We have unemployment claims happening tomorrow, just like we do every Thursday is unemployment claims. And then next week we have CPI news, consumer price index, and this is all leading to the September Fed rates, and they're predicting that they're going to be cutting rates coming September. So that's what they're hoping and what they're predicting. Now let's check on Investopedia. Use this as a resource to check out news, any kind of events going on in the world. So, but as of today, we are looking at charts, right? We're looking at markups. Now here with gold, I have gold marked up around the 33.50 area. It's a price of interest. We had this bullish candle resulting Friday's news with NFP and unemployment rate. It pushed gold to the upside, and it's a total of over 400 plus pips to the upside, leaving an imbalance. So this is a imbalance candle because it left a gap. So a lot of buyers placed orders here. So there's stop loss plays. So this is also considered liquidity. So this is all liquidity because there are buy orders that are active, people placing stop loss on this buy execution, resulting a order that is still open, and eventually the market will shoot down to fill this gap before the move back to the upside. And I am bullish on gold. I am bullish on gold, as we can see here in the technicals. In the meter dashboard, we have a strong buy. So I like to use this meter as an indicator to see where a trend is heading and where is the momentum of price. Now, right now, gold is slightly consolidating around this area, around 33.70, 33.75. It created a resistance here around 33.75 to 33.87 area, and it is a resistance zone. So I'm looking for gold to break through above this area for a continuation to the upside, or it may trend down, may cause a temporary pullback. It may test around the zone area around 33.50 before the push up. It may potentially break below the zone and fill this gap all the way to 3300 for a continuation to the upside. Now, with trading, you have to gather as much confluence. Confluence is gathering as much information to see where price is heading, right? Before you enter a market execution or before placing a buy limit or sell limit, you want to gather as much evidence in order to make an educated decision before entering a buy or a sell order. Now I'm here, like I said, I'm bullish on gold, so I'm looking for any potential buy orders. So I may I may look at gold around 3350 area around this price for a potential buy move, or I may break below this zone and may test these areas here for a move up. And of course, I am going to be following the blueprint, which is the playbook. We already listed the market direction at I'm looking at the 4 hour right now. So at the 4 hour, we are seeing gold trending to the upside. Last week and previous weeks, gold was on a downtrend. Gold was on a downtrend and it was creating lower lows and lower highs, lower lows and lower highs until it failed to create a new lower low, and it stopped here around 3275 area. It failed to create a new lower low and it started to create higher highs and higher lows and higher highs and higher lows. Now we are on the uptrend because it is currently creating higher highs and higher lows, higher highs and higher lows. So as of right now, it is slightly consolidating around this area here. Consolidation is going sideways. It is around this area here, and it's failing to break below or break above. It's just maintaining around that price range. So we can see here if gold breaks either above or below this area here, 3375, 3355, around this area here. I want to see gold break below, come down to 3350 and may retest it. Or if we see if it results a bearish candle to the downside, then it may continue down and it may retest the zone to continue down. It may it may test these quarter levels here before the continuation up. And keep in mind that there is an imbalanced candle. So this is also liquidity. We have liquidity here. We also have liquidity in this consolidation mode. So we have liquidity here as well. And we have liquidity here. And you can see these wicks here already sweeping these liquidities. So we see this wick here, wiping out all these sell orders here. And we also have this wick here, sweeping all these buy orders. So you want to know where the money is. Ask yourself, where's my money? Where's the money at? Where's the money at, right? So you want to list out where is liquidity, because that is a direction where price could potentially go to wipe out the stop losses from those sell or buy orders from those retail traders or investors. Because with the markets, it's a psychology, it's a movement of money. So people are placing buys, are placing sell orders, are placing all these orders and stop losses. So the institutions, the hedge funds will go after those people and will wipe out all their money and will hit all those stop losses and will manipulate the retail investors or traders, right? So it's all a game of manipulation, of control. So you want to beat them at their own game by looking at where is potential liquidity, right? So when you think at like a banker, you have to think like a banker. You have to think like the hedge funds, like the bankers are actually controlling these markets and they are using different strategies and different ways to take out the average trader, that the retail traders, right? So that's the whole purpose of this game is it's meant for us to fail as an average person, as a retail trader, as an investor, right? Because there's millions and millions of participators in the financial markets. So you want to observe the masses and do the opposite. So if you see that people are buying, selling around this consolidation range, and you see that you see majority of people are selling, majority of people are buying, you want to do the opposite of that, right? And you want to go after the people that are you want to go after the liquidity. So you want to go after, right? You want to do the opposite. So when people are placing, for example, here, when people are placing sales, right? You want to wait until you see a a a wick or a liquidity entry, so that way you know where to place your order, you know where the market is heading. And I would avoid trading during consolidation. So you don't want to trade during consolidation. For example, here, right now, price is consolidating and you don't want to enter for a trade right away because you know at any moment it can either go up or it can go down. It can break to the upside or it can break to the downside. We just don't know. Anything can happen. So as a trader, you want to think uh, 10 steps ahead, right? You want to think ahead of time and be able to and be prepared where you want to place your order, right? Be prepared before you even enter the markets. So, and you want to gather as much evidence so we know that we have an imbalance here, we have liquidity here. So eventually, price will go down to fill this gap before the move back up because overall the trend is to the upside, right? We look at the 4 hour. It failed to break a lower low. It failed to continue to the downside and instead it reversed to the upside, right? So we know that the current trend is overall it's an uptrend, right? It's a strong buy. It is just temporarily consolidating in this price range because we have news tomorrow. So we have unemployment claims happening tomorrow. And typically before any news event, any big news event, any red folder, price tends to consolidate, price tends to slow down and there's not much participation or activity going on in the markets because like I said, this week is a quiet week. So we don't have that much activity going on. But tomorrow we do. Tomorrow at 5:30 a.m. Arizona time, we do have unemployment claims. So you want to wait until after news to trade, right? Tomorrow. So right now, I didn't place any trades because I am waiting. So patience is key. Being able to stay patient and being able to set up your markups and be prepared prior to news is key because now you have a better understanding, a better idea where the price could potentially go if you take the time to and make that conscious and cognitive decision to look at the chart, train your eyes, right? And mark and do your markups. So here with gold, particularly with gold, I have these zones marked up, right? These quarter levels. So every $25, when price hits those levels, price tends to react. There is a price action happening when gold hits these price levels. Every $25, right? 3,300, 3,325, 3,350, 3,375, 3,400. So every time when gold, especially for gold, when it hits these these price levels, right? there is a potential buy or sell execution, right? There's a potential entry, there's a potential. So you can actually look at these core levels for a potential price entry, right? Or you can also use these core levels as a potential stop loss price or a potential take profit price, right? So you can use these core levels for your advantage when it comes down to gold, okay? Now also with other assets, you can also use the core levels, right? But I know for gold, for a fact, it's very sensitive when it comes down to these price levels, right? And now for the Euro USD, I also mark up these price levels every quarter, right? Looking at the last two digits of price, right? So here, for example, 1.15650, 1.14025. So with Euro USD, you can look at the last two digits of price to mark up these quarter levels, right? And here I can actually mark up, let's say it's heading towards this resistance, right? Area here. You can actually mark up at boom. I can turn this to 1.17050, right, as my next quarter level. All right. And price could potentially go up and hit this area and react. And it may break above, break and retest for a continuation down. I'm sorry, for a continuation up, or it may react around this level and create a resistance and head to the downside. And we also have an imbalance here with Euro USD. So this is all liquidity. This is all liquidity here. And this was from last Friday as well, right? Actually, yeah, Friday. This was Friday. This is Friday's candle. So this is also liquidity here. This is liquidity here. So price could eventually come back down to fill this gap, to fill the gap, to fill the buy orders here. We also have liquidity here, this bearish candle. This is also an imbalance candle because it hasn't been filled. This bearish candle here, this bearish engulfing candle, it is also considered an imbalance because price did not come back to fill it up. And every time there's an imbalance, either it fills up half of the candle, 50% of the candle, 75% of the candle, even or 25% of the candle, it has to come to fill it, right? It has to fill the gap. And just keep in mind that not all imbalances get filled. But the more you train your eyes and the more you notice these patterns, typically an imbalance does get filled, right? But not all of them get filled. And let's see here. I can show, let me look for an example of an imbalanced candle not being filled. Here, for example, you see here, yep, this is a good example here. You see here this bullish candle. This is an imbalance, price never came down. Well, here it came down to fill this candle, this bullish candle, but it did not fill this bullish candle here, this bottom one. It did not fill this bullish candle here. So here was an imbalance that was not filled, right? Price came down, but did not come all the way down to fill this candle here, this bullish candle. You see that? So this is an example of an imbalance candle not being filled, right? So you'll see and you'll notice the more you backtest and the more you study your eyes, you will notice this kind of patterns, right? Now we'll see with Euro USD as prices continuing up is on a buy. So it's on a bullish momentum here. It may continue to the upside. It may react around this level and will either break above, depending on market conditions and what's happening with news and everything. It may continue to the upside, or it may resist and continue to the downside. And with news happening tomorrow with unemployment claims, they're forecasting 221. So they're forecasting a higher number compared to the previous number. Previously, it was 218. 218,000 individuals filed for unemployment insurance. Now they're forecasting a higher number, resulting a weaker dollar. It's going to weaken the USD. The higher the higher number of unemployment claims, and if unemployment claims results a strong outcome, meaning a higher number compared to the previous number, then you will see the dollar, the USD index, a resulting a bearish move. And it'll push gold up, it'll push crypto, it'll push the stocks, it'll push all the other assets to the upside. It'll result a bullish move, a bullish momentum, and a bearish momentum with USD. So it's an inverse relationship. See here. Now, if it comes out to 221 or more higher than expectation tomorrow, if it results a bigger number, then it's going to weaken the dollar, meaning that Euro USD is going to push up. So it will gain strength on a euro and lose strength on a US dollar. So if news results a higher number, let's say 221, and they forecast 221 or 225 or whatever it is, if it results a higher number, it's going to weaken the dollar, therefore pushing the dollar down. As we can see here, the dollar is moving down. So it is moving to the downside. It may continue down, right? We also have liquidity here, right? We have this imbalance here. It may come down to fill this imbalance. So we have all this money here. So it may continue down. It may weaken the dollar. We also have an imbalance here. This is an imbalance, so eventually it's going to push up. So if it results a higher number, it's going to weaken the dollar. The dollar will lose strength, and it will cause euro to gain strength, therefore pushing price to the upside. And we can see here that we have money here as well. So we have that happening, okay? Delete this here. So it may continue up. The euro will push down. Gold will push up. And this is based on tomorrow's news. So depending on how it's gonna turn out tomorrow, if there's a higher number, if it comes out to 221, if it comes out as forecasted or greater, then we will see gold pushing up, we will see Euro USD pushing up, and we will see the dollar pushing down. However, if it results lower than expectations, if it results a lower number below 221, if it stays at 218, if it stays at 217, 215, if it's less than 221, if it's less than forecasted, then that's going to gain strength on the dollar. So it's going to gain strength on the dollar and it's going to lose strength on gold and the euro. So we will see the opposite. We will see the dollar pushing up and we will see gold pushing down and Euro USD pushing down because now it is lower than expectations. And I hope that's making sense for you guys because this is how you would know. This is how you use news. News is just the excuse, meaning that the news, it is there to control, it is there to manipulate. It's all propaganda, it's all orchestrated. And at the same time, it's a distraction, but it's good to be aware of what's happening with the news, especially with these numbers. Every time there's unemployment claims, CPI, the Fed rate, NFP, job openings, PPI, all these top news events, especially red folders that are high impact. Red folders indicate high impact news events. So the more you study these numbers, you will see that it correlates with the markets of what happens here. And you get to use news as a tool, as a weapon, right? For your advantage to see, okay, whether or not to enter or not to enter, to buy, to sell. It's gonna You get to use this as leverage and as a way to make an educated decision to know where the price is going. For example, for tomorrow, the less amount of employment claims, the less amount of numbers of people filing for unemployment insurance is going to strengthen the dollar because it's good for the economy, right? The less unemployment, the less amount of people applying for unemployment, the better because we want a strong labor market. So when we have a strong labor market, we have people working and we have people participating in the labor market, then that's good for the dollar. That's good for the economy. A stable, a stable labor market with stable prices, low inflation, that is good for the economy, right? But if it's the opposite, if it's a weak labor market and it's less more unemployment people, then that hurts the economy. That's going to hurt the dollar. So it's going to impact what's happening here as well. So so it's good to keep in mind of this information because it's going to help your trading decision, your investment decisions, your personal economy, and where the economy is currently at. So so now that we know that, so you want to gather as much, like I said, as much evidence, uh, because this is a game of probabilities. So you want to know, okay, if it goes up, then I know what to do. If it goes down, then I know what to do. I know what's happening with the dollar. I know what's happening with the other assets, right? So it all goes hand in hand. So it's very important to look at the US dollar index to see where the dollar is going, right? We know that if it's a weak labor market, we know that it's going to hurt the dollar, meaning that it's going to push dollar down, right? It's going to push dollar down, and it's pushing down right now, right? So when we have a strong labor market, we know it's going to push the dollar up, right? It all depends what the numbers tell you. So tomorrow, wait until after news. You can trade before news, but be careful trading during news, during this time at 5:30 a.m. Arizona time, which is 7:30 Central, 8:30 Eastern. Be careful trading around these times, okay? Because the market can go either way. And there's going to be liquidity sweeps, and then there's going to be, wicks and high price volume. So it's going to move real quick. And you got to decide, okay, you can trade during news. You can capitalize during news real quick. You can capitalize good profits during news. You can take advantage of that. But it's high risk, high reward. But you want to minimize the risk level. You want to minimize the risk percentage and maximize the reward, right? And that's the strategy that I do. My strategy, the playbook is meant for you to use this as a blueprint, to use this step-by-step guide as a blueprint to gather as much confluence and minimize the amount of risk that you're putting into the markets. And you also want to know your risk tolerance. Are you an aggressive trader? Are you mild? Are you moderate, right? Are you very conservative. Like, what type of risk tolerance do you have as a trader? If you have liquidity, if you have capital, and you want to maximize your risk and maximize your reward, then go all in. Then trade. You can trade during news, right? You can trade crypto. Crypto is you can gain some great profits for crypto by trading or by holding or by just investing. But I can't tell you what to do with your money. At the end of the day, you got to make that decision for yourself, right? I do what helps for me. So doing this helps me, right? Following this blueprint helps me, right? And doing the study, right? And the more I study, the more I look at these patterns, it strengthens my skill set, and that can also strengthen your skill set by just applying this, by just knowing what's happening with news and being very diligent with your work. Okay. You don't want to be trading and over leveraging and being just reckless, right, with your trading. You want to treat this like a profession. You don't want to treat this like gambling. You don't want to treat this like, oh, it's just a side hustle to make some extra money, right? To make some quick money. No. Like, yes, you can make extra money by learning your skill set, but you want to do it the right way. They say fast money, right? They say quick money is no good money, right? You want to be very diligent and and follow your trading plan and know your risk tolerance, know your risk to reward ratio, right? So you want to know all this information because trading is a skill set that you will learn for a lifetime. It's an ongoing process. It's an ongoing journey of continuing to learn, to continuing to uh, refine your strategy, to improve, to work on. And you will have failures, you will have success, you will hit certain milestones in your trading journey. But do not stop there. Do not be complacent or comfortable, right? You always want to improve. You always want to reevaluate and journal and reflect and what you can do better, what you know track, have a monthly progress tracker, right? And I've been able to create a monthly progress tracker to keep track of the progress I did every single month with my trading, right? And also having a trading journal. So I'll be actually posting and updating all this information into my Telegram channel. So for those that don't have access to my Telegram channel, it's in my bio on my link. There's a link in my bio under description. If you go back to my homepage on YouTube, let me actually show you guys here. If you go back to the home page here, I have links for you guys to look into, right? And if you guys join my Telegram channel here, you guys can subscribe and I'll be posting all the resources on my Telegram channel here. I post all the videos, recordings, news, and I also posted some books here for you guys to check out. Like the Candlestick Trading Bible is a really good book for you to study the candlestick patterns. Naked Forex. This is a good book for indicators. I'm sorry, for technicals without using indicators, right? Hence the name Naked Forex. So this book will teach you how to trade without any indicators, and just plain naked Forex, no indicators. It's just pattern recognition, price action, and other alternative ways to trade without having to rely on an indicator because indicators they tend to lag, right? It's a lagging indicator. So you guys want to also learn how to trade without using any indicators, right? You don't want to have so many indicators on your charts, right? And it's going to confuse you. It's very overwhelming. So less is more. Less is better, right? So you want to be able to learn how to trade without relying on an indicator because it can lag. So that's what I've been able to learn as well as trading without indicators and just go based off naked forex and price action and break and retest. And so that's a very good book as well to learn about that. I also posted other books on how to develop a privatized banking, how to be your own banker, right? So that way you can have extra leverage and gain cash value and use that cash value from your private banking system to trade, to invest into real estate, into other businesses, joint ventures, or you can finance anything that you want in life, right? You can use the cash value of your privatized banking system to borrow against it and to finance anything that you want in life, or to have extra money to trade, extra money to invest into crypto. So you can use that extra pool of money to invest in other areas in your business. So I can show you how to create that private banking system that is tax-free and that gains interest over time and dividends over time the more you keep it and the more you put into it, right? So it's another way for you to leverage, and it's another way to create more cash flow. So in this book, Becoming Your Own Banker and How Privatized Banking Really Works, it will show you the 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 strategies that the bankers are using, the elite people are using, the wealthy people are using, right? So this is information that they don't want you to know. They don't want you to know how to, how to create this extra. They don't want you to create wealth. They don't want you to, be financially free. They want you to be in debt and this rat race, right? And this cycle and this broken system that, we're all, involved in, right? But like I said before, we gotta beat them in their own game. So we gotta know what they're doing and observe what the masses are doing, observe what most people are doing. Most people are relying on banks. Most people are relying on credit cards and traditional loans and the pension plans and government programs, right? Most people are relying on these programs that at the end of the day is not going to benefit you. At the end of the day, it benefits them, but not you, right? So, relying on tax deferred programs and all these taxable programs that you're gonna take home less than what you were making throughout the years of work, right? It doesn't make any sense for you to retire 65% of your income or 80% of your income. Why not 110% of your income, right? So you're talking about financial freedom and creating generational wealth for yourself and for your family, then you got to do things differently, right? And this is where I show people that there is another way. There is a better way for you to create generational wealth, and there's a better way for you to create more cash flow, right? And that is protected, right? It's an asset protection strategy that is tax free. So that's why it's so important to become your own bank, have your own privatized banking system where you can leverage and you can borrow against yourself and you can pay yourself interest instead of you giving up interest to the banks. Whenever you borrow, whenever you borrow money from the bank or from any institution, right? You borrow that money from them and you have to repay them back with the principal plus interest, right? And they're the ones making all that money. They get the bankers, the lenders, they get paid because of the fees, because of the interest, because of selling these loan products, right? So you're giving up that purchasing power. I'm sorry, tongue twister. You're giving up the purchasing power and you're giving up the interest that you could have earned. So knowing the banking equation and using it for yourself, right? For your family, for your legacy. And so I highly recommend you guys check out these books and you check out Becoming Your Own Banker, how privatized banking really works. It will explain to you exactly what I'm talking about. Like what I'm sharing you guys, I got it from these books. I got it from mentors. I got it from people, from my inner circle. I got it from from education, right? The best thing you can do is investing into your education, investing into yourself, right? So, and this also plays a huge role when it comes down to the financial markets, right? Knowing where every dollar is going, like your personal economy, you have to take control of your personal economy. Do not give up that control. Do not give up your freedom. Do not give up your legacy to the hands of other people, right? There is a way, there's a better way. You don't always have to rely on 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 these institutions. You don't have to rely on the government, right? That it's a broken system. Like it's completely obsolete. and you're getting taxed for it. You're getting bombarded with all these fees and it's just overwhelming, right? It's and at the end of the day, the dollar is losing its value, right? The US government owns trillions and trillion, $35 trillion in debt, $35 trillion in debt, right? And the nation. There, I believe, let me actually show you guys. You guys go to the USD clock here. You guys can see it's actually 37 trillion, $37 trillion in US national debt. The government is taking and GDP, $30 trillion in GDP. But yeah, we're in debt, $37 trillion. So we're overspending. We have more expenses that we're taking home, right? More expenses than revenue, more expenses than profits, right? We have more debt than profits. So you see these numbers, right? And you're seeing all these numbers and all these, the total of debt, the total of interest paid, credit card debt, all this, everything that's in red is debt, is off balance, right? So why would you trust your money and put it into the government's hands where they can't even keep up with their own finances? So why would you trust the government to deal with your finances, to handle your finances, if they can't even handle the finances themselves, right? You see the numbers right here, it's very clear. So why would you trust the government to handle your finances? So that's why it's so important to take full control of your personal economy so that way you know what to do and where to put your money, right? So it's good to keep in mind and be aware of this information, to be aware of what's happening in the economy. Because at the end of the day, whenever you make a transaction or a payment or whatever exchange that you do with your money, you're already participating in the financial markets. You're already involved in the financial markets when you do this stuff. Because whenever you give up your dollar, every single dollar that you give up to the banks or to the government, or especially the central banks, when you give up the dollar to the central banks, it's called fractional reserve lending. So they take that money. Let's say you deposit $100 in your checking account. They take 90% of that $100. So they take $90. They lend it out to other consumers and other business people, right? And they lend it out. And in reality, you only left with $10 in your checking account. And they just type in the numbers reflecting on the screen, $100 in your checking account. But in reality, you only have $10 because they took 90% of that and they lend it out to other consumers and other business people. And they keep the cycle going. They keep the lending process going. That's how they make money, right? And they take back the interest whenever we pay them. They take the interest, they take the payment and you don't get nothing. We don't get nothing, right? We get zero in interest of whatever money we put into the bank. We get zero back in interest. So why would you want to keep your money in the bank just sitting there, not collecting any interest, just sitting collecting dust, not moving, not working for you, right? Why don't you take that extra money that you have in your bank account and invest it into the financial markets and have the money working for you and be able to multiply? Or take that money and invest it to a high cash value policy or high cash value, uh, accumulating design policy where you can borrow against it and pay yourself interest instead of you giving up the interest. And at the same time, that will gain in cash value and will gain in dividends. And it's going to benefit you and you have control of it. And then that's what I show you guys. I show you guys how to leverage this, right? How to use other ways to grow your money pool, to grow your cash value, to grow your assets, and also that's protected, right? Protection is key. It's not about making all this money, but also keeping it. It's about keeping what you're earning. It's about keeping your hard-earned working money, right? And pass it along and be able to multiply and pass it down to your kids and to your kids' kids and just create a legacy for yourself, right? So knowing it's all about investing into the right education, to the right information, and work with the right person, right? And for those that are watching this channel, hey, I'm here, right? And when we can consult about this, we can talk about this, and we can do this on a one-on-one basis. You guys can go to my Calendly and consult. We can do a consultation. But all my links are here. You guys can definitely check it out. And I'll be more than happy to discuss more about what I just talked about. So that way you guys can get that education in. But definitely invest into your education first. Definitely, do your research, invest into your education, read the books that I just mentioned. And for those that are looking to learn more and want to have a consultation about this, feel free to schedule that, uh, using the Calendly, or just shoot me a DM in my Telegram, or just reach out to me, and I'll be more than happy to consult that with you guys, and um, and we can work something out, and we can create a game plan. And we can tailor everything based on your financial situation. So we can tailor everything based on your where you're at, what are your financial goals, what are you looking to gain? So we can work that through, no problem. So anyways, going back, I know that was a lot, and I wanted to share that with you guys because something I believe the Holy Spirit was speaking through me, which wanted to share this with you guys. And because it's not about trading and making all this money, because what's the point of getting all this money and then you end up losing it, right? Like, you want to be able to treat this because it is a profession. You want to treat this like a profession. You want to treat this like a business, right? So that way it'll pay you like a business, and you can keep those profits, right, that you've earned and you work hard for, right? So asset protection and asset allocation is so, so key, right? And and this is I'm not here to give you any financial advice, right? Or that's a disclosure that I want to make, is I'm not here to give you financial advice or what to do with your money or what to put into, because you can do whatever you want with your money. At the end of the day, it's your money and you have control of it, or I hope at least some of you guys do. But like, you want to do it the right way, right? So being able to consult that with your financial advisor or whoever your CPA, your consultant, talk about talk about this, right? Mention this to your financial advisor, right? Or if you don't have one, then we can consult about it. I'm here. We can talk about it. And but before you do any type of investment or any type of a risk, right? Make sure to consult that with a financial professional, a financial advisor. And there's tons of people out there that will tell you otherwise. That will tell you, oh, invest into this and invest into that. And they're just there to sell you a financial product. I'm not here to sell you a financial product. I'm not here to tell you what to do with your money. I'm just here to provide education. I'm just sharing what I know, what has helped me, right? And I'm willing to share it, right? That's the whole purpose of this channel, is to share this information that's impacted my life, right? And this is all free, on a completely free, right? And but anyways, so this is where gold is at right now. Right now it's consolidating. We may see a break to the upside. We may see a break to the downside. We may feel this imbalance here. So, right now it's moving slow because we do have news tomorrow. So it all depends what happens tomorrow after news. For my traders that are looking to trade for tomorrow, wait before news, especially for my beginners, for my intermediates, for those that are just starting, do not trade during news. Wait before or after the news event, okay, for you to place a trade. And it all depends on what happens tomorrow, okay, on the numbers. We may see a push up or a push down, and you just make sure to trade with the trend. So we know that the trend is to the upside, is going up. Look for buys. If the trend is going down, look for sells. You want to trade with the trend. and follow the playbook. All right. And I'm gonna do like a whole boot camp covering the playbook, covering the 7 steps. I'll make a video for each step and I'll create a boot camp series and I'll put it under my playlist on YouTube. So I'll make sure to do that and I'll announce it once it's finished. I'll create a whole bootcamp series going over the playbook, going over every single step. I'll do a video for every single step so that way you guys can learn and better understand. So I'll be doing that. But anyways, I appreciate you guys for listening in and make sure to like and subscribe. Share this to someone that you know, to someone that is looking to invest, that's looking to trade, that's looking to learn this information. And so that way they can get the value and we can all learn and we can all grow together. And so I'll see you guys next week. And I appreciate you guys so much for tuning in. And I hope you guys have a wonderful rest of your day. God bless.